In the middle of this massive AI revolution, there's this company that, let's be honest, you've probably never heard of. Now, they're not making the flashy AI brains. Nope. They're the high-speed plumbers making this entire boom even possible. Today, we're diving into CRDO technology.
We all know the story by now, right? The AI gold rush is in full swing. You've got companies like NVIDIA selling the picks and shovels, those incredibly powerful GPUs that are the engines behind things like ChatGPT, and then you have the hyperscalers. Think Microsoft, Amazon, Meta, buying these things up by the tens of thousands to build out their massive AI data centers.
But here's the real question, the one that's worth trillions. How in the world do you connect all of those GPUs together? I mean, we're talking about linking hundreds of thousands of processors, and every single one needs to talk to every other one at lightning speed. And maybe most importantly, how do you do it without using so much electricity that you literally melt the data center? That's the problem we're going to unpack today.
So here's our game plan. We'll start by breaking down the biggest bottleneck in this whole AI boom. Then we'll look at CRDO's super elegant power-saving solution and the mind-blowing growth it's creating. After that, especially for you investors out there, we'll get into its valuation, run through the big risks you need to know, and finally, look ahead to the next big fight for AI connectivity. Okay, so let's dig into that core challenge. As these AI clusters get bigger and bigger, the problem isn't just about the raw power of the GPU anymore. It's about the speed and, crucially, the efficiency of the network that ties them all together. If you lose just one tiny packet of data, the entire multi-million-dollar AI training job can just grind to a halt. And that's exactly where CRDO steps in. Their CEO, Bill Brennan, puts it perfectly. They're not just selling some random part. They're solving a huge system-level problem of performance, reliability, and cost for the biggest tech companies in the world.
All right, so what is CRDO's secret sauce? How are they solving this crazy connectivity puzzle in a way that has the world's biggest companies lining up at their door? Well, the answer is in a simple but frankly brilliant piece of tech.
I want you to meet the Active Electrical Cable, or AEC. This is CRDO's main product. The easiest way to think about it is like a supercharged copper cable. It has these tiny intelligent chips built right into it that clean up and boost the data signal. This lets information travel way faster and more reliably over the short distances you find inside a data center rack.
So how do these AECs stack up against the main alternative, which is optical fiber? Well, for those short-reach connections, we're talking 7 meters or less, CRDO's solution is an absolute game changer. It uses way less power, it costs less, and it's just plain more reliable because it doesn't have to depend on fragile little lasers.
And this chart really just says it all. This is the core advantage. For the next generation of speed, 1.6 terabits per second, a normal optical port can guzzle up to 40 watts of power. CRDO's AEC solution, it does the exact same job for about half that, around 18 to 20 watts. Now, when you multiply that savings by hundreds of thousands of connections in just one data center, you're saving megawatts of power. And that means saving millions and millions of dollars on electricity and cooling. This power efficiency is CRDO's competitive moat. So, a great product is one thing, right? But is the market actually buying it? Let's turn to the financials and see how this tech advantage is translating into some truly stunning growth.
Here it is, the headline number. In their last quarter, CRDO's revenue grew 272% compared to the same time last year. No, that is not a typo. That's the kind of explosive growth that tells you their solution isn't just a nice-to-have, it has become absolutely mission-critical for building AI at scale.
And get this, it's not just empty revenue. The company is a profit machine. They hit almost $100 million in net income last quarter, with these elite, almost software-like margins around 45%. And even better, they have a fortress balance sheet. We're talking zero debt and over $800 million in cash. And they're not slowing down, guiding for over 170% growth for the whole year.
Okay, so incredible growth, amazing financials. For any investor, this all leads to the big question: what is a company like this actually worth? And this is where the market is in a fascinating tug-of-war with itself.
So here's where it gets really interesting. Different ways of valuing the company tell completely different stories. On one side, you have the average analyst price target, which suggests the stock is a bargain, with a fair value way up at $214. But then on the other side, you have a more traditional model, a discounted cash flow model, which just tries to predict future profits. And that model suggests the stock is actually way overvalued, with a fair price closer to $66. This is the central debate for anyone looking at CRDO right now.
Now let's put this in context. CRDO is trading at a forward price-to-earnings ratio of about 48.
Now that sounds pretty high, right? Especially when you compare it to giants like Marvell or Broadcom. But look at that column on the right. CRDO is expected to grow its earnings by about 250%. Its competitors? They're not even in the same ballpark. So yes, investors are paying a premium, but they're paying for a kind of growth that is just in a completely different league.
Of course, no investment is a sure thing, and with a high flyer like CRDO, it's absolutely crucial to understand the other side of the coin, the bear case. So let's run through the key items on the investor's risk checklist.
Okay, the biggest risk, bar none, is what you might call whale risk. A massive 42% of CRDO's revenue comes from one single customer, and their top 4 customers make up well over 70% of their total sales. Now that's a double-edged sword. It's amazing they've won over the biggest players, but it also means that if just one of those whales decides to pause spending or change strategy, it could have a huge impact on CRDO's business, like overnight.
So beyond that whale risk, you've got intense competition from the Goliaths of the industry. There's also been some pretty significant insider selling lately. Executives cashed out about $154 million worth of stock. And as we just talked about, that high valuation means the stock is priced for absolute perfection. Any little hiccup could get punished, and punished severely. And finally, there's always the risk that data centers shift to all optical connections faster than anyone expects, which could shrink the market for CRDO's main products.
So, with all those risks in mind, what's next? Well, the future of this whole market is going to be defined by the relentless, nonstop need for more speed, which leads us to the next big industry battleground. The industry is just moving at a blistering pace. I mean, we went from 400 gigabit per second connections to 800G, and now the entire industry is getting ready for the next massive upgrade, 1.6 terabits per second. This transition is the next huge catalyst, and whoever can provide the most power-efficient solution for 1.6T is going to win, and win big.
This whole race for speed is also part of a larger strategic war. For years, NVIDIA has pushed its own special networking technology called InfiniBand. You can think of it as a walled garden that kind of locks customers into their system. But there's this rebel alliance of other tech giants pushing for Open Ethernet to be the standard instead. And CRDO? They only make Ethernet products, which puts them in the perfect spot to benefit as the industry moves away from NVIDIA's closed system. Which leaves us with the final question. We know for a fact that AI is only getting faster and hungrier for power. The demand for connectivity is just exploding. CRDO has a proven solution right now with a huge power advantage. But can that advantage hold as they and their giant competitors race towards that 1.6T future? That's the billion-dollar answer the market is waiting for.